Mohamed El-Erian is here, Chief Economic Advisor at Allianz, President of Queen's College at Cambridge University, and a Fed. Are you a whisperer? What are you?
Observer.
You're a Fed observer. Did you think it was dovish, more dovish than you were expecting yesterday?
Oh, absolutely. And in two ways. One is a signal that they're willing to tolerate higher inflation for longer. And second, something that is flying below the radar screen is what Chair Powell said about QT, said about the balance sheet, saying that he's willing to slow down the journey to a lower balance sheet. I think that twin patience means that we may well look back on this week as the week in which central banks stepped away from a very strict inflation target to a much broader concept of an inflation target.
And this has, in your view, nothing to do with the election?
So I would like to believe the Fed in saying that it is apolitical.
You would like to believe? Do you believe?
Look, I have no other reason to believe otherwise.
Well, it was weirdly dovish, and I keep bringing up that suddenly it seems like the asymmetric risk is now of a recession after we've had two really hot inflation numbers.
So I was with you when you asked me what does the outlook look like. I told you 55% soft landing, 30% recession, 15% something better than that.
Oh, yeah, I remember.
And I think that they realized two things. I think they realized that the economy is weakening, but they've also realized, or I hope they're going to realize, that we are living in a world in which the supply side is the problem, and that we need to tolerate slightly higher inflation if we don't want to sacrifice the economy. And I think that's the right thing.
Supply side is the problem because why? Is it because governments are still spending so much? The United States government is still spending so much money? I mean, it's weird to have fiscal doing one thing, monetary doing the other thing.
Correct. And we should be doing more to enhance the supply side. It is the problem, first, because of geopolitics. We are redesigning supply chains. Second, companies are emphasizing resilience as much as efficiency. So they are embarking on a more costly supply chain for good reasons. Third, the labor market is not as flexible as we'd like it to be. And then we're looking at a very uncertain energy transition. You put all that together, and supply will not be flexible enough, and the Fed will have a choice. Either it accepts slightly higher inflation, or it unnecessarily tips the economy into recession.
What's to say that the inflation remains slightly higher and doesn't get out of control?
That's the bet. That's absolutely the risk. But there's been no evidence so far of de-anchoring inflation expectations. And markets are behaving in this way. On the inflation side, look at gold, look at equities, but then look at treasuries, and you get no indication of inflation expectations.
Like cross currents. But we said that. There's a lot of animal spirits for the Fed to be worrying about a recession. And you said the economy is weakening. Well, I've seen two hot inflation numbers, 2 straight months. I've seen that.
Three, because PPI as well.
So 3 straight, but now they're saying it's transitory again. I haven't seen, where's the weakness in the economy you're talking about?
Oh, you're seeing it in manufacturing. You're starting to pick it up in other elements, in the quits rate.
Then there's a lag, and it's going to it will continue to slow.
It will continue to slow, and they're trying to make that slowing as orderly as possible. It is fascinating to me that when Chair Powell was asked about financial conditions, everybody that looks at broader financial conditions says, gosh, they are so loose. He dismissed that completely. He's looking at a very, very narrow, and in fact, Roger Ferguson repeated it today when he said we are in restrictive territory because they're looking just at the policy rate relative to other indicators, not at the holistic financial conditions.
Roger said that, but then he said, no, and people can argue about how restrictive, which makes me think that that's a judgment. Are you sure we're in restrictive territory right now, given the economic backdrop?
We are more likely to be in restrictive than not restrictive.
Okay.
But look elsewhere as well. The Bank of Japan surprised on the dovish side. The Swiss National Bank today surprised on the dovish side. You're starting to get a signal from central banks that I believe we're going to look back at this moment.
They all got elections coming up? Let me ask you, did you see what we're spending next year?
A lot of money.
$7 trillion. So Obama, first time ever, we went over $4 trillion. Then COVID, pandemic, we need money. An extra $2 trillion got us to 6.9 or whatever. COVID's gone, basically. I mean, I still see Why are people still wearing masks? I don't know, maybe they got the reason. But why are we at $7 trillion? Why $7 trillion next year? Why?
Because whether it's the U.S. or elsewhere, we ratchet.
You never go back from the crisis levels?
We don't. That's really
a bad...
Well, neither does the Fed's balance sheet.
Yeah, the UK is the same thing. It is sad, and at some point we're going to pay for this. We will pay for this.
We have been saying this for so long that we're going to pay for it. We're going to be talking to Maya McGinnis a little later about some of the issues surrounding this, too. We've been saying this for so long, decades and decades. When does it actually...
So remember the old PIMCO concept of the cleanest dirty shirt.
Yeah.
Okay, we live in a relative world. So if we misbehave and others misbehave more, we don't get punished because we've got the reserve currency, and we are the place where people outsource savings to. So as long as we remain the cleanest dirty shirt, then we're not going to be punished. If others start being cleaner than us, then this will change. But right now, we are the cleanest dirty shirt.